This one was a banger. What's up guys, and welcome back to another video. Now in today's video, I'm going to explain to you exactly how I made $3,900 today trading gold across the pre-London and New York session. Now first of all, I want to get started by saying how absolutely incredibly bad price action was today. It was a very poor day for trading, and to be honest, I'm surprised we did so well out of it. It was genuinely a risk off day for me. All of these trades that I placed were half risk, so I was risking half of my normal size. So obviously you can figure out it could have been double the profit if we were trading our normal size, but I understood that it was technically a low probability day, and so I was a bit more risk averse. As well as that, I just want to talk to you about how absolutely crazy the numbers are that we're talking about right here. $3,800 or $3,900 used to be 3 months of my salary when I was working at the law firm roughly 2 years ago. And to make that in just 2 trades today is an incredible feeling, but also quite scary. So I'm going to talk to you at the end of the video about how I process sort of big numbers and how I'm processing trading moving forward as I begin to size up. But before I do that, I'm going to give you obviously a breakdown of the trades, an explanation of the market, what I was seeing, why I took the trades, as well as my psychology going into these positions. This is realistically what gives you guys the most value. You guys have been loving these trade breakdowns, so if you haven't already, drop a like and let's jump into the charts. But first things first, obviously I know this is trading YouTube, so I'm gonna have to show you the proof, obviously, which we always do here since we are completely transparent. But look, you can see here we have essentially 10 PA accounts, which means past funded accounts, and you can see the profit right here, 388.18 on each account, which works out to $3,881.80. So basically 3.9K. So there you go, we've got that out of the way. PA accounts, 10 of them, $388 profit on each one for a total of 3.8K. Absolutely killing it with these at the minute. Obviously we're taking it slow and steady, but the goal is obviously to build up and get past that buffer phase. And yeah, but obviously now let's jump into the charts and explain the positions so that I can actually show you the value rather than just the numbers. All right, so as I said at the beginning of the video, the first trade that I took today was actually in pre-London. Now it was a super early trade. I'm not normally even awake at this time, but this trade was taken at 6 a.m. London time. So essentially what I did is I woke up, I sort of had some weird intuition and woke up and saw the 4 hour was closing right as I woke up. So obviously as a trader, the first thing I'm going to do is load up TradingView. And I saw that actually as we opened up here, we closed below and we had a very, very clean top wick. But before I get into that, let's just give you a breakdown of the market as a whole. So right now, the daily time frame was actually bullish previously, but the weekly time frame actually did close bearish. So you have a bit of a conflicting bias here. And even though we had no top wick on the current daily, I actually was very confident that we could continue down further to grab liquidity, as you do have a few key levels down here. So I was okay taking sells, but I did understand that actually my bias for the day was bullish. So this is why I'm going to show you in a bit why I was a bit more aggressive with the management. Now, as I said, the 4 hour was closing below the level. Now, let me set it back to what it looked like before I took the position here. So we were right around this point here, this 6 a.m. 4 hour close, which is coming up on this next candle. And essentially we can break down the market very simply here. So we had a level right here to the left on the 4 hour. And every time you've closed below that level, you've continued all the way down towards this area right here at the bottom. So for me, as I see this 4 hour closing here, it's a very strong indication that we're going to continue down and come and tap into these levels. So what do I need on that closure? Well, this is a breakout. So all I need, once we have a breakout to the bearish side, is I need a top wick, retesting this level, and a continuation downwards. And what do we get? Now, if I play it forward, obviously it's going to show you how the next 4 hour candle closed. But if we drop down to the 1 hour, you're going to get a bit of a better idea here. So where did I actually take the position? Well, as you can see, we actually pushed up straight away and made ourselves a nice little top wick for the candle. Obviously, I can't show you it properly on replay mode, but I've gone ahead and dropped down to the 5-minute candle to show you where this candle now opened up. So this candle right here that I've marked it in blue is essentially the opening here of this next 4 hour candle. Now, what do you see happening? First of all, straight away, we came back up and essentially made a top wick for the 4 hour candle. Now, if you flip back to the 4, obviously what you're going to see here is a closure below, and now you had a top wick up towards this level. So that's confluence number 1 for me. But what did I tell you before? I said I needed a retest into this 4 hour level above here. But as you can see here on this first 5-minute candle, we actually didn't get that before we flipped. So why did I actually take a wick entry position before I actually saw that retest. I clearly saw as this played out that if we look on the 15-minute time frame, what did you have here? Well, you essentially had a very, very strong tap into this previous 15-minute level. So you can see here we have a low coming down and being made here. And what do we know about market structure? It likes to retest these highs and lows. So as you can see this 15-minute coming down, it makes a lower low here. Then it makes a lower high, which is again another confluence for my trade. And once you close below here, now you come back and retest this previous low that you've made. For me, that's a massive confluence, but I couldn't enter right off of that tap purely because I needed that retest of that 4-hour level. However, once you drop down to that 1 minute time frame, what are you going to see here? You're going to see a very, very strong rejection off of this level down here, which you can see, and the 1 hour actually closed very, very strongly. So my entry was actually a little bit further down here. So the 1 hour rejected very, very aggressively here. And now once you tap into that level and aggressively reject, for me, that's a key indication that we're looking to continue back down. So as I see that rejection, I jump into the trade. I don't get the best entry here. It was somewhere around here. And essentially what I'm doing here is taking a wick entry on the 4-hour time frame. But as I've just shown you here, I've dropped down to the 15-minute, the 5-minute, and the 1 minute to dial in my entries and get some sniper entries. Now, if this is a bit confusing for you, I understand, but we are using essentially multi-time frame analysis right here. And this is something that I have used and utilized and developed that has completely changed my trading recently. Now, I made a video on it in complete detail last week and uploaded that. So if you haven't seen it already, click on my channel and find it. It's literally one of the most recent videos. If not, I'll leave a link in the description. But essentially, that video is going to give you an in-depth analysis and explanation on exactly what I've just shown you here in the live market. But anyway, back to the trade here. Now, the first thing we need to figure out is the stop loss and the take profit for the position and why I put them there. So as you can see, we quite clearly have very clean traffic towards the bottom of this range down here on the 4 hours. So obviously, that's where we're going to put our take profit. But as you know, the benefit of my multi-time frame analysis system is I can take a trade on the 4 hour using a 4-hour take profit, but there is no need for me to use the big 4-hour stops. So what are we going to do? We're going to zoom in again and look on the 5-minute time frame, or even the 15-minute actually. So as you can see right here to the left, we made some very, very strong highs here and we kept wicking into them and rejecting. So now we know realistically above this level should be safe. And if we do start to push back up there, you're most likely going to see a continuation upwards. So we put our stop loss right above those highs there, giving ourselves a little bit of room in order to actually survive a sweep if that were to happen. And you can see exactly what happens here. We come down and push into profit. So now we've got 70 pip stops on the 5-minute, but we're using a 4-hour take profit, which is giving us a very healthy risk to reward. Now, if you're smart, you would have seen that essentially we actually rejected way before we hit our take profit. So how did I actually survive this trade and how did I actually come out with a win? Well, this is using my dynamic trade management. So a lot of people will get into a trade like this and they'll go, okay, cool, set and forget. Let me just take the position and see where it runs. Cool. But the problem with that is the market is consistently giving you more information on every single closure. So as you can see right here, as we start to push down, this 15-minute time frame right here closes with no bottom wick. Now, if you've seen my previous videos on price action, you'll know no bottom wick indicates that there is no further range to push. So essentially what price is doing there, without explaining it in too much detail, is price is now creating a support level by closing no bottom wick right at this level. So the guys who've been following me for a while will know exactly what I did here. The moment that 15-minute closed with no bottom wick, I literally ripped down, put my stops to break even, closed partials, and then as we start to pop down again, we actually popped down with no top wick in this case. So essentially meaning that we could rip up at any point. What did we do? I actually just closed full on the position and secured profit around this level right here. So we came out with a decent profit on that trade. It was around 0.7% for the account, which is absolutely killer. So yeah, very, very clean trade. But obviously, essentially, this is using my dynamic trade management and allowing me to avoid any unnecessary stops because this market is giving me more information. And once I have my reversal signal here, which is this 15-minute no bottom wick, there's no reason for my ego to tell me, nah, I need to be right, I need to stay in the trade. I close full, and guess what happens immediately afterwards? We start to reverse and continue up. So one lesson you can learn from that is essentially, if you're in a position and the market starts to give you indications that it's switching against you or that you might be in the wrong direction, close out, even if you're in profit, because you can understand that essentially we are consistently being provided with more information and more data. So we need to essentially work off the data that we're given. When you got in the trade, you had a certain specific set of information, but now that the trade's progressed, maybe 5, 10, 15 minutes, you have a completely different market condition that you're in, and you need to adaptively manage risk to the current conditions, not the ones you were in before the trade. So that was trade number one, but how about the second trade that allowed me to get to that $3,900 in profit for the day? Well, this trade was actually a little bit smaller, but it was a very clean position and it was also buys. So you see here, essentially we've had sells and now we've had buys, which means I'm not married to my bias. So if I take sells and then I'm also essentially seeing the market conditions shift and buys are printing, I'm not gonna say, no, I need to be right on the daily direction. I need to take sells. That's just an ego trade. I am essentially in the position of making money. And if I see buys printing after taking sells, guess what? We can flip the script and we can take buys even though we've taken sells previously, because the only thing that matters is the current market conditions when you take the trade. So this is exactly what the market looked like just before I got in my position. Now, what you're gonna see here is essentially the 1 hour and the 2 hour had closed bullish here, and you grabbed a lot of liquidity with these two previous candles. And we were continuously rejecting from down below after sweeping a lot of liquidity. As you can see, we broke all these lows from London session and swept the lows and rejected very, very strongly. So for me, that's a very clean indication that we're looking for buys here. Now, what happened next? Well, essentially, as you can see, we start to push back above the level here. Now, what happened was this candle that you can see right here, so this previous candle that closed above here, as you can see, yes, it technically closed above the level, but this is where our patience comes into play. As you know, we don't take trades where it is just above the level. We like to use a little buffer zone, which is this gray box right here. And if you use that, it's looking like it closed pretty much just above the level. Now, this was the 1 hour close right here. So the 1 hour close on the 15-minute was just above. But for me, I needed a bit of a stronger confirmation that we were actually going to continue and close above like this. So what did I do? I waited for the next closure here, which was actually on the next 15-minute. And what actually ended up happening was we closed above after making another large bottom wick. So this is another liquidity grab, and we then closed above. Now, since we'd grabbed so much liquidity in these bottom wicks, I was actually in a position where I thought to myself, why would we need to grab any more liquidity before I pop up? So what I normally do in these situations when you've grabbed so much liquidity from these bottom wicks is we actually just had an entry straight off the rip. So I had an entry the moment this 30-minute candle closed above this level right here. Stops were below the current candle low. And essentially I was expecting with half size that this candle might just pop straight up, something like this, right? And just fill the range. However, that did not happen, and that is why when I have an off-the-rip entry, I enter with about half the size, because the next thing that actually happened was we came down and decided to make a bottom wick anyway. But what do you notice right here about the bottom wick that we made? Well, this 1 minute candle right here closed with no bottom wick straight away. Now that is the trend play. That is my number one confidence for taking a wick entry. And essentially what I did the moment I saw that was take a second entry with also half the size. So now I'm in a full size position here, taking that position with the same stop loss down here and essentially the same take profit, riding it up back towards the top of that level. So now you can see I'm actually in two positions here, but if we average it out, my average entry is somewhere around the halfway point here. So let's take away that other one and let's just use our average entry since I was trading on futures. And we can see right now what happened the moment we came down and made that no bottom wick. We actually started to reject extremely heavily and came up and actually flipped on this candle. Now, since we did it so aggressively here, and as again, you can see this 1 minute candle previously closed no top wick, which is another reversal symbol. Count the amount of times I said wick in this video, it's ridiculous. But no top wick on that 1 minute candle. You came up and flipped on the 15-minute candle. what did I do? I closed half of the overall position here. So I closed half, and then I actually ended up going risk-free here, break even on the position. So you can see now eventually what happened was here, our break even got tapped, but look at the management right there. The moment our break even gets tapped, what happens? It just goes through the floor. So that is why we have such extremely tight risk management, because obviously the conditions were not in our favor. We took a small bit of profit with that half closure, but obviously the rest came back and hit break even. But yeah, essentially taking advantage of breakouts in both directions, initially for sells on the 4-hour time frame, and then taking buys on the 30-minute time frame. But you'll notice how in both incidences, I dropped down to the 1 minute or the 5 minute or the 15 minute to really dial in my entry, get myself some tighter stops, and yeah, nail those positions. So those are the trades for today. Hopefully you learned something. If you did, drop a like and subscribe, join the free Discord, and obviously turn up every single day to the live free daily trading streams where you can catch these trades with me on YouTube completely for free. And other than that, I'll see you in the next video. Much love. Bye-bye.